hang on, Gordon. Let's bring in two of our sharpshooters, Jim Lacamp, Senior VP of Investments at UBS, and Lee Munson is the Chief Investment Officer at Portfolio. Lee Munson, I don't hear Wall Street talking about China business people defaulting on commodity contracts. I don't hear Wall Street guys talking about 3% electricity output or stockpiles of coal that are growing daily because they can't sell the stuff, and that China's economy is not growing at 7-8%, Lee. Is this Wall Street trying to just sugarcoat it once again?
Absolutely. You know, the last time I was on your show a few weeks back, I mentioned that China was having a hard landing, and everybody jumped down my throat and wanted to say 7.5% growth and go China. You know, my whole thing is that China has always been lying about the numbers, and thank God you brought in a guest that has some reason, that's looking at the utilities, which has always been a classic indicator here in the United States. When you have ships that are sitting there with coal sitting on them, you have to wonder, why do I want to invest in China? So while Wall Street's going to tell you a tale of 7.5%, it's because they don't want to dig deeper, Larry, and to find out where value is. I mean, that's my whole thesis of why somebody should look at Japan. It's been dead for 23 years. It's had a chance to cool off and recover. China is just beginning the decline. Well, I would encourage investors to listen to this and take heed. All
right, Jim Lacamp, I want you to weigh in on what Gordon Chang is saying and what Lee Munson is saying, because, Jim, you got Europe on its back. In fact, these Spanish banks are going to go into liquidation. You know that. The worst in Spain is not over yet, Jim Lacamp. Second, the United States, we're not even growing at 2%. Most of our indicators are heading south. Now, we have a smart guy like Gordon Chang who confirms what the New York Times said in the weekend edition, that China's growth is substantially lower than Wall Street's fantasy of 7 to 8%. Now, what the heck's all that mean for the stock market?
Well, it's a failure of leadership around the world. It's a natural result of the collapse of a fiat currency system. So what does this mean? It means deleveraging around the world, starting in Europe, but it's going to happen. It's been happening in Japan for a long time, and it's going to happen in China, and it's going to happen here. So that means you sell off assets. That means lower prices. That means bondholders go from haircuts to scalpings to beheadings in Europe. So this is going to take a long time, and it's going to cause a lot of disruptions. It may mean bouts of stimulus that the markets rally in, but investors need to be very careful about assuming that means an economic turn, because global debt has grown 12% per year over the last 11 years, and global growth has not kept up.
Yeah,
so we need to delever, and it's going to be painful.
Right, the deleveraging is going to be painful. Gordon Chang, I think that commodity prices may continue to fall. In other words, you're describing a Chinese contraction, at least in the commodity area. I don't know about the retailing area. That tells me commodity deflation. And Gordon, that tells me commodity deflation, these are global markets, are going to continue to rip through commodities, industrials, and energy throughout the world, Gordon Chang, because when China sneezes, the rest of us catch cold badly.
Well, you're absolutely right, Larry, because, you know, it's not just commodity prices falling. You have, for instance, BHP, Billiton, and Rio Tinto putting all of their expansion plans on hold because of problems in China. And that is going to rock countries like Australia that have been very prosperous in the last 5 years, selling all of this stuff to China. So I think that what we're going to see is commodity deflation, but a lot of industrial production is going to just stop.
All right, Lee Munson, how do you react to that? How do you react to that?
We're seeing that in the U.S., too.
Rio Tinto, I mean, Australia, I mean, when you look at the Australian Stock Exchange, yeah, you got Rio Tinto, you got BHP Billiton, but that's not the U.S. at all. I mean, the person that's really going to have a problem is the European investor, because the Eurozone is the largest exporter to China, and the U.S. is second. So while we may have this issue of contagion down the road, I disagree, Larry, that just because China sneezes, it's going to have a direct effect.
No, we have it now. We have it right now. Look at the manufacturing, and we have it right now. Look at the Richmond Fed, the Philly Fed, the New York Fed. All of the manufacturing indices in the United States are already slowing down. The best one was Dallas, and that was only up 5. So we're already seeing a manufacturing contraction
why are
in the
mortgage
U.S.
applications at a 2-year high? Why are jobless rates failing to go lower and lower and break out of the 2-year range?
Are you really believing all this about the housing market? We've seen prices fall 1.9% year over year, and everybody's doing cartwheels saying that the markets and foreclosures are going up as well.
At the margin. That's how you make money, is at the margin. It's not on like the nominal
Lee
level.
Munson,
Hey,
at the
when
margin.
You've got a senior vote, people at the margin were going up.
Give me one thing to hang on to. Give me one. You've heard Gordon. You've heard Jim. Give me one positive investment, real fast. We're running out of time. Fast.
Best positive investment, I think, right now. The best bet is invest in Japan. They have been dead for a couple decades. I think there's value. The pension funds are way overweight in bonds. They have to start investing in equities. I think you could outperform
They just
almost
jumped their
everything
consumption tax to 10%. They're going to get killed over there.
That value-added tax in Japan is the dumbest
they
thing
talk
I heard.
about
Gordon Chang, thank you very much.
thing.
Jim Lacamp
These guys don't
and Lee
understand a thing.
Munson.